Now to help us focus on the fundamentals behind the technicals, we've got just the person, Wayne Kaufman, Chief Market Analyst at Phoenix Financial Services. Wayne, good morning to you. I just took a look at the green back above 104. I'm wondering if this rally continues here, does it pose a bit of a headwind or more so of a headwind for stocks? It seems like the bulls have managed to shrug this run up here off so far.
Well, you know, the market is very interesting right now, and I think that we're actually everybody's waiting for the next correction for stocks. I think we're actually having an internal correction already because, as you know, market breadth has not been great. You know, the S&P 500 is at all-time highs, but only 40% of the stocks are over their own 10-day moving averages, and we're seeing in the S&P 1500, you know, the small caps and the mid caps
are just huge. Yeah,
they've been terrible. Year to date, the Russell 2000 is down 4.4%. 54% approximately of the S&P 500 are down year to date.
Well, Wayne, let's talk about that for a second because I got a chart up here. I just want to flip through a couple real quick and then pose the question here. You've got the S&P is holding up near these all-time highs from last week, just shy of 5,000. Just want to show you where we are relative to the January highs and lows. So you can see to begin the month of February, very favorable for the bulls, right? You mentioned the all-time highs. Here's the S&Ps, but you also mentioned here, as we look at the S&Ps above the 50, the 200, I've got a quad chart now. S&Ps in the top left, I've got the Dow in the top right, the NASDAQ in the bottom left, and to your point, the Russell has been lagging. It's in the bottom right corner. I mean, a real standout player here. But oftentimes, that's strange. I feel like we always talk about how the stronger dollar is more a headwind for multinationals. I feel like this chart should be reversed. It should be the Dow, which is lagging, and the Russell, which is accelerating to the upside and participating more so.
Exactly. And then you have to dig into what's really driving the rally. And basically, we've had a tech rally dominated by AI. There's been some good healthcare. You know, Kevin was talking about Lilly and Novo, and some of the industrials have been good, but it's been an extremely selective market, extremely selective. You've really needed to be in the right stocks. And again, to me, an internal correction is already underway. And even looking at the Magnificent Seven, you know, now jokingly everybody says it's Magnificent Six or maybe less. You know, Tesla is the worst stock in the NASDAQ 100 year to date. So I think that an internal correction is underway. The typical seasonality for the election year would lead us into we should be okay into next week. But then I think that everybody knows that the last couple of weeks of February can be problematic. And I've been, you know, telling our guys here for a long time that I thought there was a chance for an important bottom to be made in March or around March.
Okay, so maybe some selling prior to that bottom, internal correction on its way. Is that a reaction to what we're seeing in terms of some of the pushback from Powell and expectations for Fed rate cuts?
I'm not so sure about that. I mean, some of it is, but, you know, right after we had the FOMC, you know, we had that terrible day. The next day, stocks absolutely rocketed. And I think that the deterioration in market breadth has been going on for a while, even, you know, before the FOMC meeting and before his commentary on 60 Minutes. And I think that at this point, the market knows that a March cut is very, very unlikely. And I think that what Powell said was very reasonable. The data's been good. They don't need to see the data get better. They just want more data. And that seems reasonable to me. And I think that a cut in May seems possible, if not likely. Other central banks are talking about when they may begin cutting. And that would make a cut in May would make the Fed pause about 10 months. Historically, the average pause has been around 8 months.
Okay.
And, they don't want the level of rates to be restrictive. And if inflation comes down, then
becomes
that
more and more
actually
restrictive. Yeah.
it makes them more restrictive.
Yeah. But the data's been pretty strong recently, so they don't want to start to cut too soon either necessarily and pose a larger problem here. Getting back to the dollar a little bit here, how much of it is tied to the geopolitics? Oftentimes we see the dollar bolster amidst times of tension, unease, and uncertainty like what we're seeing in the Middle East.
Certainly, there's some degree of that, but I think it has to do with the huge 2-day jump that we saw in the 10-year. It's the biggest jump since June of 2022, and you had a very significant gap up over the 20, 50, and 200-day moving averages. So I think that that's the single biggest factor, is just big jump up in interest rates here, which of course, the dollar and interest rates historically move together.
We've got the Treasury futures up here. I've got the longer dated on the left, the bonds. You've got the 10-year on the right, and they're now back below the 50-day moving average to tie that, again, to the visual to your point here as far as the jump we've seen in rates, the 10-year spiking. Talk to us a little bit about ultimately, if we do continue to see rates higher here, is this something that stock bulls continue to shrug off? We've been discussing how it's been really kind of focused on the positive, discount the negative, but with the dollar higher, if rates continue higher here, I feel like that could pose a headwind and ultimately provide that catalyst for that internal correction you were talking about.
Well, I think it's already been a headwind. I think we are already in the internal correction, and the stocks that are doing well, if you want to look at the interest rate affected stocks, the housing stocks, they were fantastic last year. They've run into a wall here. Other interest rate sensitive areas are being affected. And when you look at the stocks that are really pushing the market, again, if you look at AI is just an absolute explosion. And, Kevin did just that segment, you and Kevin did just a phenomenal segment regarding everything that's going on in the market. But the one thing that he said that I might take issue with is when he's talking about NVIDIA and that people might look for something that's maybe a better valuation. I think that what's going on in the AI stocks, in particular, and NVIDIA and some of the other chip-related stocks, I think that NVIDIA is actually a lot cheaper than it used to be. You may think that's funny, but the race for AI is ongoing now, and those companies, they're not affected by interest rates. And when you talk about Lilly and Novo Nordisk, the drugs that they've got, those are explosive sales. They're not going to be affected by rates. So I think that rates are already a headwind. The dollar is already a headwind, and there's some other macro stuff going on. But the selectivity is very important, and you have to be in stocks that have a really, really powerful story. Those are the ones that are carrying the market right now.
Taking a look here at this stocks that have been carrying the market here, it's on the bottom half of the screen. It's the NASDAQ all the way up to just shy of 17,800. And this is with rates which have come off. The 10-year on the top right corner here from 5% back down to this 4% level. We're holding above that right now. But again, the market really focusing on the positive, discounting the negative here. Wayne, a quick thought on any other foreign currencies you're watching. I mentioned at the top of the show this move we're seeing in the dollar has it to new highs against all G10 currencies except for the Canadian, except for the loonie.
When I was cycling through my charts on currencies and on commodities, I was really kind of amazed at the lack of anything really exciting going on. The Japanese yen tried to make a move and then it fell back down. And in commodities, it's really everything is pushed way down. So nothing. I think the excitement right now is in certain specific equities, and that's where we've been focusing.
Okay, well, that's what the stock bulls have been focused on as well here, and that seems to be the correct vantage point to have. Appreciate you joining us here and sharing your thoughts. Wayne Kaufman joining us.
Thanks for having me.
Thanks to you, Wayne, from Phoenix Financial Services.